What's up, everyone? Excited to give you this video today about CrowdStrike, which has been making some waves throughout the market for their AI technology, which I'll get into a bit later in the video. First off, this is not financial advice, so please do your own research in D&D. In this video, I will cover the chart, give a price prediction based on technical analysis. Then I will go over their AI technology, and then I will cover the fundamentals of the stock and take a deep dive into the financials. So with that being said, let's start off the video. So we see CrowdStrike here coming down to this 50-day moving average, which is at about $140. I believe this daily moving average likely provides some support for shares. And then more notably, the 50-day moving average crossed above the 200-day moving average in early June. And for those that don't know, that is called a golden cross and basically demonstrates and suggests that there is bullish momentum for the stock. So right there, definitely a good sign to see bullish momentum for shares, and that golden cross is definitely signifying that. So awesome to see there. But in terms of a price prediction, I do think that we likely hold this 50-day moving average and move up to resistance at about $182 over the coming months. Obviously, this is based on technical analysis, and the stock is somewhat, beholden to the general market. So obviously, if the S&P 500 drops 15%, this price target won't hold up. But I think if everything kind of stays equal here, even if we saw sideways trading, I do believe that CrowdStrike will likely move higher off this level up to resistance at about $180, which is where shares had consistently consolidated over the past couple months, especially in June to August of 2022. It's where shares had topped out also in October of 2022. So it's also about where shares had bottomed out in May of 2021. So definitely a significant level here, and I do believe we will likely move to this $180 level over the coming weeks to months. So with that being said, the stock is also has also outperformed the market since early March, which obviously when the market goes higher, I always like to buy stocks that are outperforming, and vice versa when the market goes lower. So definitely good to see the outperformance from the stock, and we're above all daily moving averages, implying bullish momentum. We got that golden cross earlier in the month, which suggests to me that shares likely move higher. So that is my prediction for CrowdStrike. Also, when we look at this screen here, this shows me the average return by each month for the stock. Obviously, we only have 3 years of pricing data. The stock IPO'd in 2019. But you can see July, August, and June are, one of the top months. So they're actually, the second, the third, and the fourth top month in terms of monthly returns. So as we kind of get bullish technicals and we see a bullish seasonal trend for shares, I think that likely all plays well for CrowdStrike to move higher. And then I'll just quickly cover this. It's not really a huge deal, but short interest is 3.4% for CrowdStrike, which isn't that high at all, and definitely doesn't signify that the stock could have a short squeeze anytime soon. So shorting activity is pretty mild on CrowdStrike. And then when we take a look at the fundamentals of the company, I think this is very, very interesting. So CrowdStrike has an AI data advantage with over a decade of cybersecurity breach data that informs its algorithms and is expanding daily. So really AI has been a recent trend, but CrowdStrike has been fighting, cyber attacks with AI for over a decade. So it's not a new thing for the stock, and they're not just throwing in AI in some earnings call to add some fluff to the stock. This is actually what CrowdStrike has been very, very early to the AI party, so that is a good sign to see. And then the company also launched new artificial technology products such as Charlotte AI, which is an AI security analyst, and secured a partnership with AWS to further expand its AI offering. So, larger companies are coming to CrowdStrike to, make AI deals such as Amazon. So good to see that there. And then, AI has always been a part of CrowdStrike's core value uh, proposition and messaging. Like I said, it's nothing new for the company. And then this was very interesting. So Microsoft is also a Gartner leader in endpoint security with its E5 suite and Defender. However, CrowdStrike disclosed in an earnings call that it wins eight out of 10 enterprise deals against Microsoft. So awesome to see that this company is beating its competitors in terms of new business. So love to see that, and it's not shocking because they've been in the AI security business for a long time. They're not Microsoft, who does a bunch of other things. This is a security company. This is a cybersecurity company that just happened to have been in AI well before the competitors. And then in late May of 2023, CrowdStrike launched a new generative AI product called Charlotte AI. This is basically an AI powered security analyst that can be asked various questions about the system. Unlike many gimmicky generative AI products which have been launched, I believe this actually provides value. So I would agree with that statement. Like I said, this kind of goes with the general theme. CrowdStrike isn't tracing a trend. They've been creating the trend for the past decade. So awesome to see there. And then when we talk about some financials, which I'll dive into the numbers a little more granularly in a second here, but CrowdStrike reported solid financials for the first quarter of fiscal year 2024. Its revenue increased by a rapid 42% year over year to 693 million and beat analyst forecast by 16.4 million. The vast majority of its revenue was derived from subscription services, which also rose by 42% year over year, and professional service revenue continued to grow by a rapid 48% year over year to 41 million as enterprises executed and implemented projects. So this growth rate is very, very staggering and very, very strong. It's one of the reasons why the stock trades at such a high multiple. I think it's like 66 times PE. And like I said, I'll jump into those numbers in a second. So awesome to see that there. And we can see the revenue estimates have came up significantly for each year the stock has been public. So you can see that here with in 2020 revenue being about $1 billion, and then now it's at about 3.9 billion. So awesome to see that there. And then for margins, and this is an interesting point, CrowdStrike reported a non-GAAP gross margin of 78%, which is a new record for the stock. So love to see that there. And then the company also trades at a price to sales ratio equal to 14.5 times, which is 54% cheaper than its 5-year average. So investors are paying less than they were on a price to sales ratio as AI has evolved and become much more of an investing point for many investors. So I think CrowdStrike really isn't being seen as an AI company like it should. And for all those reasons I just mentioned, I think that's going to change. And I think over the long term, this is an amazing stock to own for the long term. Obviously, that's just my opinion. But with that being said, let's take a peek at the fundamentals, the financials for the stock. So this is Seeking Alpha here. It puts all these factor grades relative to the peers. So for valuation, for example, you're seeing you're seeing a grade of D plus relative to peers, and you're seeing a good grade for growth and profitability. And I'll just jump into those numbers a little more granularly. So we see, like I said, price to earnings ratio of about 60 for the next 12 months. And then we see a price to earnings growth ratio of 1.3 times, which is below the sector median of 1.8, which is a good sign. You want to see this as low as possible. So awesome there. And then price to cash flow at 30 times, which is above the sector median of 19. So all in all, the numbers don't look tremendous, but once I get into the growth numbers, you'll understand why investors are paying up for this company. And anytime you see a company with high valuations and that's trading at high multiples, you always want to see growth kind of rationalizing that valuation. And we definitely have that high growth here. So revenue growth of 49% over the past 12 months. Love to see that. And then revenue growth for the next 12 months, this is what that forward means, is 38%. So awesome. Really love to see that as well. And then, we have CapEx growth, 76% compared to the sector median of 10%. So EBIT growth for the next 12 months, 54% growth compared to the sector median of 10%. So really love to see all this. Amazing growth numbers. And like I said, anytime you have a stock that's trading at high valuations, high multiples, you need to see growth kind of rationalizing those high multiples, because an investor is never going to pay up for a high multiple stock unless there's a path to profitability, and that path to profitability always requires high growth rates. What it also requires is a good gross profit margin, which we have here. And for those that don't know, gross profit margin is basically just revenue minus cost of goods sold. So in this example, let's say I was selling lemonade. If I were selling lemonade for $1 and it cost me about 27 cents to make the lemonade, well, then I'd be making 73% on every single thing that I sold, right? Every single product that I sold, every cup of lemonade that I sold. That's basically what gross profit margin is. So it's kind of it shows that as you grow, you're able to turn that growth into profits, right? Because your gross profit margin is so positive, which, as you can see here, is well above the sector median of 50%. So love to see the growth metrics, but really, really love to see the gross profit margin kind of show you how advantageous that growth can be for the company's bottom line. So love to see that. And then cash per share as well is very healthy. So we have $11.93 of cash per share for the company, which is almost 10% of the market cap. It's about 8% of the market cap. So to have 8% of the market cap in cash allows the company to have some backstop to any type of economic downturns we see, or maybe even an M&A opportunity. So love to see that there. Really, really good numbers here. So the growth metrics and the profitability metrics look great. And this is an absolute blowout number. So these are analyst revisions, which, for those that don't know, basically there are a bunch of covering analysts on the stock. So JP Morgan, Goldman Sachs, they all have analysts whose main job is to cover this stock and predict its EPS and revenue for its expectations for EPS and revenue for upcoming quarters. And what we're seeing here is that 39 different analysts raised their EPS expectations, and 0 brought them down over the past 3 months. And then pretty much the same thing here for revenue. 40 different analysts brought their revenue expectations up, while only 1 analyst brought their revenue expectations down. So you're seeing 78 up revisions, which basically just tells you over the past 3 months, investors have become more and more bullish on shares, which really just tells you that Wall Street is becoming more and more bullish on the company. So that's a great sign as well, right? I mean, anytime you're seeing the analysts change their numbers like this so drastically, shows you that there's a good expectation that EPS and revenue will continue to rise. So with that being said, to kind of put it all together, we're coming down to that 50-day moving average, which I believe holds. We're seeing this AI stock really not be viewed as an AI stock, which I think is a huge misconception throughout the market, which I think will get flushed out over the coming years and quarters as the company continues to push that AI message. And they're really not even pushing it. It's just the reality of the company. It's really no fluff in that at all. So, and then we also have pretty high valuations, of course. But at the end of the day, it's nothing crazy. At least the company is profitable, which many AI, correlated companies are not profitable at all. See-through AI, Sound AI, they're not profitable, but this one is. And what I love to see is that the growth metrics are really rationalizing that high valuation, and we have amazing gross profit numbers at 73%. So you add it all up, I think CrowdStrike is a great long-term hold, and I think it's being underappreciated for its AI tilt. So with that being said, I'll end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.